right, we back once again with a quick video on how TRIN works. The TRIN, the ARMS index, I've been using it for years. It's amazing at looking at the internals of the market using advancing stocks, the advancing and declining stocks, and then the advancing volume and declining volume. So basically what it is, in simplified terms, is the AD, the advanced declining of stocks, over the AD, or the advancing volume, declined volume of stocks. So you can see the calculation right here. What it means is when you have a value of 1, that just means that the AD of stocks is basically equal to the AD of volume. That means that things are in equilibrium. So that's why we're gonna take the TRIN. You can go to Thinkorswim and put in a $TRIN, and you can get that calculation for free through Thinkorswim platform. Just mark that $1 area, and then what you're gonna do is, and see, I've marked some kind of highs and lows over the years, and just kind of left them there. I mean, this really is a nice overbought, oversold indicator. But the idea is that when you're tracking the stock market, if you say you've got the market is declining, okay, this is not obviously not the market. Say you've got the market, let's just go with ES here. Well, let's just go with SPY, since that is, say you've got the market declining here, okay. So what I'm seeing here, and this is going to be fairly accurate, is we've got a decline into 920, okay? We've got it declining, but then we got a pop. And the reason this would be bullish to me, even though we had sort of a negative day, is because this spent the whole entire day under that $1 mark. And yeah, we didn't go up, but we didn't crater. And because this is under the $1 mark, and it's under yesterday's range, then you can be pretty safe that there's not going to be a crash, because essentially this ratio is saying that the advancing stocks and the AD ratio of stocks is less than the AD ratio of volume, which means it's under 1. And that's creating a bullish underpinning to the market. And sometimes the calculation gets out of whack, but most of the time it's pretty solid as an indicator. The other thing I use in combination with it, hopefully that doesn't confuse you. I do get a little confused with the calculations sometimes. I'm not going to act like I don't, but it is, what's nice about it is it's nice and visual. The basics are below 1. Don't take it as gospel, but below 1, you're essentially bullish. The market is. And above 1, you're essentially bearish, and then you do get you get overbought and oversold signals as well. So as you're getting above that 1.5 or getting below 0.5, you're starting to get those overbought, oversold signals. Okay. Then I also use this tick, okay, in combination with it. And what this is doing is taking the tick of each of the stocks and creating it's like the net tick of the Dow 30 stocks, okay, and it's gonna print a number basically, and you can get overbought, oversold signals as well with the tick. So using this in combination with this, most people like to use RSI or some sort of oscillator that's based on the candle closes, or however you can do it, based off of the candle high or whatever, but usually it's based off the candle close. But this is just going to take all 30 Dow stocks and give you its upticks and downticks in aggregate, and you're going to get overbought, oversold signals based on pretty consistent levels. This minus 500 and minus 1,000, plus 500 and plus 1,000. You're usually not going to see the reading exceed these levels, and if you do, so say for example the tick gets up to this 1,000 range, there's a very high likelihood that it's going to at least reverse in the near term. So it's really good for day trading. This setup right here, these 3, really good for day trading. Now what I do is I actually have a VIX as well, in here as part of, maybe I just got to do that, as part of the package, just because the VIX is nice to look at as far as its chart. And so I'm just watching these three to get an indication of the internals of the market. Is fear going up, or does fear look like it's about to reverse? Essentially, this is the fear index, the volatility index. I don't take any one of them, by itself. They all got to work in, together. And then I've got my tick oscillator, so to speak. And there's some other tick indicators, a little bit more advanced, like the cumulative tick, which will basically be adding the tick together over time, which gives you a little bit of a smoother signal. But I like to just use the tick because it's real time. So this is going to be real time indicators here, not lagging, and they're not really predictive, but they're just what's happening right now. And so hopefully this helps you. You guys can use that in your own trading. Definitely, I've got this little chart here at the bottom while I'm watching the flow of the market as far as the stocks and indices go. It gives me a really good idea of sentiment and where I think the market's going to be going. And then this kind of helps out with the timing. So it'll give you a lot more confidence in your trading if you learn how to use these. If you have any other questions or you want me to do more videos on these, let me know in the comments. And then don't forget to like and subscribe. And we'll see you next time.